So before we actually dive in, here is what we are going to cover. Number one, I'm going to show you why paying off your mortgage early actually matter. The ugly truth about how much interest you're actually paying right now. I'm going to walk you through 5 simple strategies anyone in Canada can use right now to pay off their mortgage much faster. You don't need to be financial expert. You just need a simple plan and a little bit of discipline. And in the end, I'm going to show you real example with real numbers so you can see how many years you can knock off and how much interest you can actually save. You have a $500,000 mortgage at 4% interest. Over the next 25 years, you will pay back that $500,000 that you actually borrowed, but you're also going to pay around $300,000 to bank in interest. That is more than half on what you're actually originally borrowed. And check this out, if your rate was 5% instead of 4%, that is approximately right now, you pay closer to $370,000 in interest. But here is the good news. Every extra dollars that you're going to put towards your principal will reduce the interest you will pay over the life of your whole term. Now let's get into the 5 simple strategies you can start using right now to pay off your mortgage significantly faster. In the beginning, make extra principal payment. This sounds almost too simple, I know, but it's one of the most effective way to reduce your mortgage faster. Every month, add a fixed amount to your mortgage payment and make sure your lender puts it directly towards your principal. That might be an extra $100, $200, $300, basically as much as you can. Make sure you can actually handle it. Okay, so let's go back to our $500,000 example at 4% interest at 5 years amortization. If you add just $200 a month to your payment, you can cut your amortization down just over 22 years. We knocked it down from 25 years to 22 years, and you saved roughly $40,000 in interest. If you add $500 a month, you can knock it down to about 19 years, and you will be saving $80,000 in interest. So we are talking exactly about the same house, the same $500,000 we borrowed, exactly the same mortgage, just we are adding higher pay each month. So if you're shaving off years of your payment and tens of thousands of dollars in interest, you just have to make sure this prepayment stays within your lender limit. Second strategy, and this one is switch to accelerated bi-weekly payment. This is a classic Canadian move, and we know it works. So instead of paying once a month, you pay every 2 weeks. Here how it works. Take your monthly payment and divide it by 2. If your payment is $2,600, you pay $1,300 every 2 weeks. There are 52 weeks in a year, so that is 26 half payments, which is the same as making 13 full payments instead of 12. So you're effectively made an extra full payment per year without feeling it. On that same $500,000 mortgage at 4% over 25 years, switching to accelerated biweekly can get your mortgage free in just under 22 years. Basically, you'll knock down 3 years. And in addition to that, you also saved $40,000. Let's move into our next strategy. Make lump sum payment when you get extra money. So here in Canada, most mortgages let you make an extra annual lump sum payment up to certain limit without any penalties. let's go back to our example. So that $500,000 mortgage at 4% interest, 25 years amortization. If you make a one-time $10,000 lump sum payment in year 2, you can actually shave off 9 months from your amortization, and you save roughly $15,000 in interest. You just have to respect your lender's annual prepayment limits. Let's move into our next strategy, and this one is increase your payment when your income goes up. I know it sounds simple, but people don't do that. This one most people tend to skip. Anytime your income increases, maybe you get a raise, you get a promotion, or your business income grows, take a portion of that increase and add it to your mortgage payment. For example, let's say your net pay goes up by about $400 a month. If you keep your same lifestyle as before and direct that $400 towards your mortgage, you are going to knock off years of your amortization and save huge interest. And the thing is, you're not even going to feel it because you never got used to spending that extra $400. In Canada, most lenders let you increase your regular payment by 10 to 20% per year without any penalties. All right, so let's move into our next strategy. Shorten your amortization when you renew or refi. When your term comes up for renewal, you can choose to actually shorten your amortization even if your rate does not change at all. So for example, on $500,000 mortgage, it's 4%. With 25-year amortization, your payment is around $2,600. So at renewal, you can switch to 15 years amortization. Let's say you got better rate right now, which is 3.5%, and your new payment jumps to $3,500. Yes, that is higher, but now you will be mortgage free about 10 years earlier. And you are also going to save $150,000 in interest. If you can handle the higher payment by shortening your amortization when you renew your mortgage, is one of the most powerful moves you can do for yourself too. All right, those are the 5 strategies almost anyone can use right away. In a minute, I will give you 3 aggressive strategies to do exactly that. Okay, first, let's pull it all together. Let's say you have a $600,000 mortgage at 4.5% interest over 25 years. So your monthly payment right now is around $3,300. Over the 25 years, you will be paying around $400,000 in interest. You borrowed $600,000, your total payment is $900,000. Now let's say you combine a few of the strategies we mentioned before and you create one. You add the $300 per month to your regular payment. You also make a lump sum payment every year from your tax refund bonus or your extras. Hear what happened. Instead of taking the 25 years to pay your mortgage, now you are done. Do you want to guess? You're done at about 18 years. You basically did it 7 years earlier. And your interest savings are in the neighborhood of $120,000. You basically saved yourself $120,000. So same mortgage, same interest. You just use the rules in your favor. Okay, so let's recap everything we just said. You have seen the ugly truth about the mortgage interest, and now you understand how much that $500,000 mortgage cost you over the 25 or 30 years. You also learned the 5 practical strategies to pay off your mortgage faster, make extra principal payments, switch to accelerated biweekly, use lump sums wisely, increase your payment when your income goes up, and shorten your amortization when you renew. Then we can look at how to combine a few of those strategies together. On that $600,000 mortgage, we managed to save around $120,000 in interest and cut your timeline by about 7 years. Remember, every extra dollar you put toward it is the dollar buying back your future freedom. If you like this video, please subscribe, and I will see you in the next